Bloomberg Audio Studios.
Podcasts, radio, news.
Let's get to that point because shares of Abercrombie Fitch are just absolutely soaring today. The retailer raising its full-year outlook after blowing past first quarter sales estimates. The retailer now expects net growth to rise around 10% for the year. That's up from previous estimates of 4 to 6%. Joining us now is Fran Horowitz, the CEO of Abercrombie Fitch. Fran, it's great to get this perspective from you. What drove your killer year? I mean, you've just been delivering quarter after quarter. Can you pinpoint one or two things that have really helped drive it for you?
Sure. So to your point, coming off of a defining year for us in 2023 and then taking that momentum right into the first quarter and having a record quarter, just an incredibly exciting day today here on campus. What drove that are a couple of things. I think most importantly, our formula of staying close to the customer and really understanding what their lifestyle is and what they're looking for is key to our success. That accompanied with a lean inventory and this chase model that we have created that helps us make sure that we're listening, we're testing, we're learning, and we're reacting to the business in real time is really helping us drive these results.
We had a great line in our Bloomberg piece that said, you extended your bounce back from the teen fashion graveyard. And I thought that was a really good image. And analysts responding to your quarter are asking the question, how long can you keep up this extraordinarily strong pace of growth? What do you think?
Well, the exciting thing is that we've actually separated the brands. If you go back through the history, Hollister is truly the iconic global teen brand, and we've been able to really age up Abercrombie. We've expanded the addressable market. I mean, the consumer now starts with Abercrombie when they're in their early 20s. They stay with us well through their 40s. And additionally, we've just completely grown all the categories, no longer being a jeans and T-shirt company, but caring for all their different lifestyles. It's truly a lifestyle brand, sorry, as I was trying to explain. Today, they come to us for all sorts of occasions, from their wedding parties to their bachelorette parties to where to work to going out on the weekends. So the addressable market as well as the range of what we offer is much greater than what it used to be.
Fran, I want to talk a little bit about pricing and pricing power, if you will.
Sure.
I know the discounting has always been an issue for retailers. You've held the line, at least for the last couple of years, on that here, kind of limiting those discounts in a way that certainly helped the bottom line. Do you have confidence that you can continue to limit those discounts?
Romaine, I'm so proud of the progress that we've been able to make. If you think about the AUR that we have been able to grow since 2019 in both brands, double digit, is done by twofold. One is through reducing our promotions, right? This discount to ticket for us used to be 30, 40, 50%. Today, it makes the customer happy at 15 or 20%, as well as making sure that the inventory is lean. And that's really the other key piece to it. It's making sure that they buy it when they see it. It may not be there the next time that they come into the store. So our expectation every season is to come in with basically, I guess I would call it flat promotions to the prior year. And then the customer really tells us, what their appetite is, and we can flex our muscle every week and make those decisions.
As you sort of try to, though, you have to, of course, stay ahead of the trends to a certain extent in order to sort of make sure you have the right inventory for those folks when they come into the store. Has that gotten more complicated, or have you found ways to make that process a little bit more efficient or at least a little bit more reliable?
Great question. Yeah, I would tell you that with both the digital business as well as the in-store business, we can test our product pretty efficiently today. And then the key is being ready with your supply chain and making sure that it's agile enough that you have your fabrics ready and that you can get the product in on a very quick basis.
When you take a look, Fran, at the overall consumer appetite, we keep seeing lots of different signals that the consumer is slowing down. Are you noticing any of that? And if you had to predict out the next 12 months, how would you describe your consumer?
Yeah, Alex, I guess my answer to that would be if you look at the results for 23 and you look at the results for the first quarter, clearly that's not what we're seeing from our consumer. I think the key is if you offer the consumer the right product, the right fashion component at the right value, they are responding. I mean, the customers in any economic time have a choice on where to shop, and they are choosing us, and that is true in Hollister as well.
Are you noticing how they're paying at all? Like, I know you do the buy now, pay later stuff. Like, are we seeing any more sort of on credit? Are there delinquencies on that, or delayed payment, or buy now, pay later? Any other read-through I can get?
No, there's been no change to any of that payment.
That's really amazing.
And what about expansion going forward, Fran? I mean, what are you at, around like 750 stores? Are you planning to increase that count?
Yeah, we have an opportunity both domestically as well as internationally to continue to grow our store base. In 2023, we opened up 65 new experiences around the world. We'll open up about 125 this year. The opportunity for us is to gain back a lot of share internationally. We've been on quite a tear in North America for the past few years,
right,
and just starting to see our playbook exported internationally and really starting to work there as well.
Where internationally? Because, this is still a company that's the lion's share of its sales here in the U.S. and North America. Where internationally are the best opportunities?
I would tell you that in the EMEA region, the UK and Germany are our two biggest countries outside of the U.S. That is where we're currently focused. We've built a team in London that's helping us localize our assortments and localize our promotions and make sure that we deliver our product appropriately from a calendar and a customer wearing perspective.
All right, Fran, well, we really appreciate you taking time to be with us today. Fran Horowitz there, the CEO of Abercrombie & Fitch, coming off of its first quarter earnings report here, and some pretty decent numbers, 21% comp sales growth, Alix, and of course the guidance that they gave going forward, also pleasing investors. You see that in the share price, up 24% on the day.